What's going on, guys? It's GBP, baby. Welcome back to our weekly and daily reviews. First of all, I want to wish everybody a happy new year, and I hope everyone's had a good holiday. It's currently 5:19 p.m. on Friday 29th of December, so I am recording this on the Friday, and that's purely because I'm busy this weekend, as I'm sure a lot of us are. But yeah, we're going to start with the 3-month DXY, and we're going to work our way down because we've got the whole year ahead to be planning and looking forward to. In fact, let's just show you guys the 12-month chart. You'll see that we have a nice fair value gap that's formed after 2023. So it's likely that price may want to be drawing down into these levels here eventually, which is nice to take into consideration. But yeah, I'm going to start on the 3-month. You can see that fair value gap there, just below that low. And I'll bring our attention to the PD arrays that I have my eye set on. So first, I have this swing low residing below here that I want to see get traded to. And I'm not saying that this is going to happen in the next month, but obviously within the next 3 months, I'm anticipating this low to get traded to. So we have sell side liquidity residing here. We have a nice fair value gap over here, which would be nice to see if price can reach down into. In fact, let's make them red. And also, I believe, well, this is an order block. These 3 down consecutive candles before the up move. This is all a bullish order blocks, meaning that once price trades down into these levels, we should anticipate some kind of reaction off of it anyway. So we can also mark out this, I guess, as the opening of the bullish order block. Then again, I don't want too many lines on my chart. But regardless, I want us to keep our eye on these levels here. And also, if we look at the current trading range on the 3-month, so from this swing low, this is the last down close candle, this swing low to this swing high, you'll see that we're just at that 50% level. So once we reach 50% level, we expect expansion through it, and then, you know, running to the next level, which would be 75% level. So that lines up nicely with our fair value gap that we have here. And then we do have an inversion fair value gap residing just below that. But yeah, over the next 3 months, I'm anticipating a lower movement on the dollar. Now let's drop down to the 1 month, and you can see we've had quite a bearish month in December. We fell lower and ran back into this range. I don't know if I can't recall if I did call this out, but I was anticipating the 50% level of this wick to get traded to on the monthly, and you can see that's exactly what happened. And then we've had just a slight reaction off of that recently. So let's just line that up now. 720. And then I'm going to thin this line, make it black. And then now we have that consequent encroachment marked out. So what I'm doing now is I'm currently just watching this level. So does price want to continue lower, or does it want to respond away from it? Obviously, January's in like 3 days, so we'll be able to see pretty quickly what kind of reaction we're getting off it. But I am anticipating a slight pullback and then a continuation to the downside. And the reason for that is because when we look at the charts and we look on the high time frames, such as the monthly, we need to think about, okay, what do we anticipate the next candle to look like? Do we expect a down close candle or an up close candle? And overall, I expect a down close candle. We've been bearish. We've taken out sell stops. There's been a clear break in, market structure. We ran out buy stops residing above here last year. If you guys recall, we ran out all these buy stops. So now we need to offset all of that buy side liquidity that we've grabbed and release it somewhere. And down here in that 3-month fair value gap and below the sell side liquidity would be the perfect place. So that's why I anticipate a down month in January, which means that the first 2 weeks of January, I want to see the high of the month get made. So in terms of the high of the month, we need to start looking for PD arrays that could potentially be creating that high of the month. So once we drop down to lower time frames, we'll be able to start to see and frame our expectations for the month. So let's go down to the weekly, and there again you can see this week, this week where we traded down to the consequent encroachment and just reacted nicely off it. So now we're currently in this trading range from this high to this low. We can anticipate price to likely return to equilibrium, and the reason for that is because once a range is created, price always returns to equilibrium. So what I'm going to do is I'm going to mark out equilibrium here. I'm going to make it red dashed, and I'm going to type weekly equilibrium just so that we are aware that is what we're looking at here. We'll put that on the right, and we'll make that red as well. And then this was the monthly consequent encroachment. And you'll see how I'm starting to frame these levels on my chart so that when I refer to them, I'll know exactly what I'm looking for. And then we have sell side liquidity, and this is a 3-month fair value gap, isn't it? Which is a very high time frame fair value gap. So that's another reason that I'd like an anticipate price to want to trade down into it. I'm going to get rid of the midpoint. So yeah, as I was saying, the first 2 weeks, I'd expect the high of January to be made if we're expecting a down month. We do have non-farm payroll and a lot of news next week, so that's going to play into it. So next week, I'd like to see an up-close candle, to be honest. And that's because we've not only respected the monthly consequent encroachment, but you'll see this weekly bullish order block here. If we look at the midpoint of that level as well, you'll see how it looks like, well, we still have 6 hours left. But so long as volume closes above this 50% level of this order block, I'll be happy to expect higher prices next week. And that's because it's respecting, again, it's expecting mean threshold off a bullish order block, which, you know, shows bullishness. Technically, there's a fair value gap here. This is an implied fair value gap, and that's because there's only downside delivery. Now, yes, we have this wick below, but overall there's downside delivery here, so that's another reason I'd like to see price trade up higher into this range before moving lower. This fair value gap up here, in all honesty, I'd like to see this get left open and act as a breakaway gap. So what I'm going to do is I'm going to make this orange, and I'm going to type in anticipated breakaway gap, and that's because I don't anticipate price. I don't anticipate price to trade back into that. So it'll be nice to see if that can get left open, and like I said, this weekly equilibrium get respected. So let's drop down to the daily now, and you'll see we've had quite weird price action, obviously, with you know, Christmas Day being here, and you can see it's kind of just toppled its way down. But in the new week, it would be nice to see if we can expand higher and start running into this fair value gap that we have here, and potentially into these order blocks. So that's what I have my eyes set on for the new week. In terms of low of the week, I'd want to see this Thursday candle. I want to see us stay within this range. I don't want to see this low get taken. And what I'd be looking at again would be equilibrium of Thursday's candle to be respected in the new week. So let's just, but because of how consolidated price is, and with the new year and everything, probability is very low. So in terms of risk management, guys, and trading in general, we shouldn't be risking much at all, purely because, you know, anything can happen. It's the new year, and this is my first time actually trading, well, you know, being this level, having this level of understanding at a new year point. So I guess we'll see what happens. But let's just type in daily mean threshold, because I'm expecting, well, no, never mind, not daily mean threshold. 50% of this candle regardless is what I'm expecting us to be respecting. Now this Wednesday candle, this massive down day, I'd expect that to be traded through. So I want to see that high of Wednesday get taken out in the new week as soon as possible, so that, like I said, we can start to watch us trade up towards these fair value gaps residing up here. So what I'm going to do is I'm also going to mark out this daily fair value gap, and there's also a volume imbalance obviously here, but this is the fair value gap I have my eyes set on. Now, I'm not saying we're going to necessarily reach it in the new week, but I do want to see price start to draw up towards it. Let's drop down to the 4 hour, see what we can find. Again, another volume imbalance. Volume imbalances are like fair value gaps. If we drag that out, you'll see that that lines up perfectly with the midpoint. So I'd want that to act as support. Why? We had delivery on the downside, traded through it, and closed on the upside. So now this 4 hour gap between here and here, I want to see that provide support. So I don't want to see price come back below here. It can trade down to it, and I anticipate price trade down to it. However, I don't want it to trade through it, because I want to see these relative equal highs get taken out and this daily fair value gap get traded to. So what I'm going to do as well is on the daily, was it? All of these highs, Wednesday's high, Tuesday's high, and then last week Friday's high, I want to see get taken out basically. But I'm not going to put too much on my charts, especially not on the dollar, but you can see we have relative equal highs above here waiting patiently to be grabbed. We have this nice imbalance down here that we didn't grab today completely. So like I said, these are all reasons that I anticipate price in the new week to come down, accumulate, and then distribute higher. Because remember, we want to see the first 2 weeks act as the first 2 weeks of January, or the first week, create the high, and then we can start to look for a run down lower into that south side liquidity on the monthly, that down here. So that's my analysis for DXY. Let's now go to GBP USD, and we'll start again on the 3 months and see what we anticipated. So if we're anticipating lower dollar, what does that mean for pound? We're expecting higher pound, obviously. Now pound's been working in this range from high to low, so we can again do the same thing. It'll be this high because it's the last up close candle before the down move down to this low, and you can see that we've actually traded through the 50% level, came down, and look at the reaction we've had of that. So what's this showing? This is showing a willingness to want to go higher. So same as dollar, but inverted. We expect to run into this buy side liquidity up here, and then we have this bearish order block up here that I'd like to see us trade into. So I can mark that out in black, and I'm going to write monthly bearish order block, and that's where we can anticipate a reaction. Now there isn't a direct imbalance. Again, this will be, to me, I see this as a fair value gap. It's an implied fair value gap because there's only deliverance on the downside. So technically there's a fair value gap up here. I'm not going to draw it out, but it's there. And once we drop down to lower time frames, we'll likely find one above there anyway. So let's go to the monthly, and you can see that reaction off the midpoint of this order block. So you can see that we turned around beautifully, traded higher, took out these highs. We haven't quite traded off into this rejection block yet. I am anticipating some kind of reaction here before we then push higher. So in terms of the new week, because this is the monthly, I do expect to up close month again, but I don't necessarily expect this buy side liquidity to get taken. It'd have to be a very bullish month if it does. But regardless, what I would be keeping my eyes on now would be the consequent encroachment of this wick. When you see long wicks like this, always mark out the midpoint, because you see how price reacts to them, as we saw today, this week with the dollar. Was it the dollar? As we saw this week with the dollar. So it's very important to bring our attention to them. 29888. Make it dashed, and I'm going to put monthly consequent encroachment. C.E, that'll be fine, and then we'll put it in the middle, and then we can get rid of this. So wicks are fair value gaps too, so we anticipate price to want to trade up and into that. Now, in terms of the downside of the month, this wick that we traded and closed, well, hopefully we close above. Remember, we've still got 4 hours left, but if we close above this wick, I'd anticipate this wick now to provide support. Where exactly? It'd be the midpoint of this wick. So once we drop down to a low time frame, we'll see this, and price is allowed to come down. In the new week, in the new month, I'd anticipate price to come and create the low in here. So remember, the first week or two, come and create the low, and then I'd like to see expansion for the rest of the week, running into this little swing high here, and again reaching that consequent encroachment. If we are overzealous, price will simply run straight up to the buy side liquidity and come to that fair value gap I was talking about that was implied on the 3 month. I'm also going to mark out this because this is going to be a target eventually, this fair value gap, and that's a monthly fair value gap as well, so price is going to want to draw to that. Beautiful. So let's go down to the weekly, and you'll see there's a lot of consolidation around here. We're kind of just edging our way up. It's not really the best because we are likely just going to be staying in this range to create the low of the week. So from this low to this high, I'd like to think that we can come down one more time to that midpoint I was talking about, and then move high up to that consequent encroachment. We do have this fair value gap. We do have this bullish order block. Midpoint of that, you'll see that's pretty much lined up with the midpoint of this. Sorry, let me just lighten this up. with this wick. Remember, this box is a monthly wick, which I'm anticipating us to return back into. So it is a range in itself, but if we look at this order block and we look at the midpoint, you'll see how that lines up perfectly. So that's where I'd like to see the low off the new. Oh wait, sorry, have we forgot the weekly? We forgot the weekly. Okay, I was wondering why. So here's the weekly, guys. So in the new week, you can see we've run out stops here. So we've run out buy stops already, relative equal highs. So now that buy side liquidity has been taken, we need to release those stops, and you'll see that we have this nice little low here. And where does that line up with? Again, that midpoint that I have my eye set on. I'd like to think that we can come down and trade down, potentially even into this. So I'm going to have a few levels marked out for the new month. But here, I'd like to, in the new week, next week and the week after, I'd like to see if we can reach down and accumulate our positions, remember, for us to eventually offset above these swing highs and up to that consequent encroachment. So let's now go to the daily and have a look. Not really ideal, but here on the 4 hour, you'll see there's a bullish order block that we may want to trade down into. Now, this is, as you can see, it's not the cleanest price action. Let me get rid of this. This is not the cleanest price action, and because of that, it can be quite difficult and, again, low probability. So although I have my eyes set on certain levels as to where I want to see a trade to, looking at this, especially on the 4 hour and it being this ugly, it's not the cleanest, but we will know when we have reactions. For example, once we do trade lower, I'll be waiting for a large expansion higher for me to then be looking for buys and things. So we just got to wait and see. Remember, I can't tell the future, but we're just learning to anticipate here and have an expectation, because what are we anticipating on dollar? Remember, we're expecting some kind of swing high to be created in dollar before dollar moves lower into the sell side. And then on pound, we're expecting some kind of swing low to be created before moving higher into that buy side. And then let's finish up on euro. So euro, we're looking at the 3 month again. What range? Last up close candle to the last down close candle, which is here down to here. Similar to pound, but we've reached 50% level, and now we're expanding through. Now 50% levels in general, I anticipate them to be traded through, like to and through. So that's another reason I'm expecting up close 3 month. Remember, this is the 3 month right now. So obviously we've got this swing high, same as dollar's swing low and same as pound swing high, so we can put buy side there. Now this target's pretty close, so it's likely that euro is going to trade to higher PD arrays, and we do have this beautiful 3 month fair value gap resting up there as well. So let's draw that out, bring our attention to that. Let's make this 50%. Like so. So I'd like to see price in the new month trade higher, obviously, in the next 3 months. So let's go to the monthly now. See what we can find. Again, same thing. I'm looking at this wick, 50% level off that. So I'm going to mark all the same things I just marked out on pound. I'm pretty much marking here on euro. So we had this monthly fair value gap, didn't we? And then we had the midpoint, and that's where I want to see the low of the new month get taken, so made. So that's going to be, just do this. So first week or 2 weeks of January, I'd like to think that we could trade down lower into this, and then use that as a springboard to run into the buy side liquidity and potentially that 3 month fair value gap. Let's go down to the weekly, and you'll see again, implied fair value gap. You need to make sure you try to learn to identify them. They're not easy to identify, but once you see them, you'll understand delivery are only on the upside, so we anticipate price want to come back into this range. Now I've got the 50% level marked out because I'd like to see it respect it. It can trade to the bottom of it, that's not a problem. However, preferably I'd like to think that we can, volume would remain at the 50% level and then allow us to trade higher. So let's get that 10% marked out, like so. And then let's go down to the daily, and you'll see we have a nice bullish order block down here at the 50% level, and also this. So this should now act as a propulsion block, similar to how this bullish order block acted as a propulsion block, causing price trade higher. We expect the same thing here. Price will come down into this and then cause price trade higher. So I'm going to draw our attention down to this bullish order block on the daily. So once we reach it, we know that we need to anticipate some kind of reaction that we could be buying from. But first, obviously, we need to make our way back into this wick, and that's probably what next week we'll see us do. Trade lower, got a nice fair value gap there. All these lows to run out. Remember, there's going to be lots of stops residing below that, so it'll be nice to see if we can pull back into this bullish order block and then accumulate more positions to trade higher and run into that buy side liquidity we have targeted. Let's see what the 4 hour is saying. Again, another beautiful fair value gap that we're likely going to want to see ourselves trade into. So I'm going to mark this out in blue. I doubt it's going to just run straight there. Don't get me wrong, if we reach there in the new week, so be it, because there is a lot of news. We have, like I said, non-farm payroll and all sorts going on next week, so it's perfectly possible. So that's one thing to take into account. In terms of high of the week, it might want to trade up into this wicks, midpoint, assuming we close, where we are around here. But I don't want to say too much because we'll probably wait. It's best to wait for Monday's trading, of course, to then outline and plan for the rest of the week. But overall, I'd like to see us draw down into this bullish order block so that we can eventually trade higher into that buy side liquidity. So that's going to bring us to the end of the video, guys. I hope this has been insightful. I'm excited to start the new year. And again, I want to say thank you to all my new subscribers. Welcome. And yeah, I'll catch you tomorrow on Monday when we'll review price action. And then we'll probably be, on the lower time frame. So we'll be focusing on the daily, 4 hour, 1 hour, 15 minute, and maybe even 1 minute, depending on how excited we get. So one thing to take note, look at 50%, traded to it beautifully there. So thanks for watching, guys, and I'll catch you in the next one. Peace.